Hello everyone, this is Juan Sarmiento and today is Friday, February the 11th. Okay, so today let's see what the monitor tab tells us. Okay, we are P&L, profit and loss, since the opening is now slightly negative, just by $1. So the market has been declining very strongly and therefore our profits have been wiped out. I'm not surprised and I don't worry about that because this is a long-term investment. Okay, this might be a bear market here, but it won't matter. You can see now that we have a definite downtrend. You can use your drawing abilities here and draw this line. You can draw a parallel line to that, and this could be the line to beat. Okay, that line there. Let's draw another one here. Click there, and then there we go. Okay, usually we have this declines in a three-way format. It could be a five-way format. So you would have an A, B, C. So that means that the current decline should match this line here, which in turn should match this, more or less this one here, the previous decline. Okay, that would be a pretty strong, and then once it reaches that bottom, then potentially you could have a new high afterwards. So from a technical point of view, that's all very nice, but how would you know? You need years of evaluating these charts to even begin to understand what is happening, and by no means that's a definite solution to the puzzle. So what we do in this series is simply add 500 or one share of the SPY every week. And right now we have $425 available in cash, but as you can see, a share of the SPY will be $441. So we need to add some cash, and I've been adding every week a $500 cash adjustment. Because this is a paper trading account, I'm just adding the pretend money. I hope that's very clear, that I started this close to a year now ago. It was in April last year, and I've been adding $500 every week, and then from there buy one share. So, and if you go back enough days, let's say 350 days, you would see all of the trades that I have been entering, one a week. Okay, and you might say, well, you're losing now. No, I'm winning $7.20. Okay, but eventually this market will go up, and all I'm doing is dollar cost averaging, which means every month we buy a tiny piece of this puzzle, and then eventually when the market does go up again, we would make profits, and in a matter of 10 years, 20 years, something like that, we would have enough for retirement. That's the goal here. So I'm going to analyze this, and I'm going to just add one more share, so we have 42 shares. And the current price is $441.51, and now we have $925 to trade that. Confirm and send, and then perhaps next week we would have enough for the next one. So you're just simply buying one share of the SPY, and account and positions will tell us that it's a little above that. So let's adjust that, cancel, replace, and then just unlock it, and now it's $442.10. And then it is filled. Okay, so now we have 42 shares, and that is equivalent to $19,000. You can see it here. My average price could be also displayed in the Analyze tab, and here is my average price is $440.88, very close to the current market price. Well, it's 442, so we are in a little bit of a profit now. Obviously the market is bouncing since I started talking here a little bit. Let's say if we take a look at a 15-minute chart, yeah, there was a bit of a bounce from the bottom. I don't necessarily mean that it's going to break this trend, but short term in this 15-minute chart, which we don't care, is jumping. Okay, so again, we go to the account statement and look at the P&L since the opening. That's $33. At some point we have something like $1,500, but the markets have been declining, and that's why. Okay, again, we don't care. This kind of trading is for the long term. Okay, that's all for today. Thank you very much for joining me, and see you next time. Bye bye.